Hi, I'm Phil Grant at philsgang.com and Phil's Gang National Radio Show. During this presentation, I'm going to try to answer your question is, what do you think the market's going to do? I'm going to tell you what it's going to do. Do me a favor, however, during the presentation, please hit share, subscribe, and like. We really appreciate it. Also, anytime during the show, you also can join my gang free for 10 days. All right, let's get started. So here we are Tuesday. Friday, as you know, the market rallied and gave it all back and closed flat. We were up about 400 points. And then yesterday, the market closed down about 500 points, a little less than that. So what happened? What's going on? Well, first of all, we are having what we call a Wall Street year-end rally, so they get their bonuses. They're going to do anything and everything to get to December 5th. That's right. They used it as a stepping off. They used the earnings season to step off. Now they're trying to drive this market to the 5 days before Christmas, because that's when the official Christmas rally begins, and it ends in the last 2 days of January. So they're doing everything and anything to get there. As I told you yesterday, their pool will have dropped from $45 billion last year, going to drop anywhere from 22% to 35%, and they got a real problem. So that's what they're doing. So let's talk about yesterday. Well, as you know, when we've had a real strong dollar going all the way back to May, because we've had a very hawkish mood in the market. In other words, the Fed became hawkish. They started to raise rates. That means the dollar goes up, gold goes down, of course, and that's what they've been doing. But in January, remember, in January of 2022, this year, they stopped all QE. No more rigging the market by bringing interest rates back to zero. So, but the market, without that QE, all of a sudden started to fall apart, started to go down. So, because that's how strong QE was for 13 years, kept the market going up 1,200%. Once they stopped, the market started to tank. Because stocks are so overvalued, it's incredible. Every time I know, when I buy a stock, I look around, there's blood all over my desk. I'm getting a nosebleed. They're so high, these stocks. So it's ridiculous. Now, Powell is not a very smart guy. None of these people who run the Federal Reserve, especially Grandma Yellen, they're not very smart. They're academics. They're like Powell. He's not an academic, but he is a bureaucrat. They don't know the real world. So the other day, remember, he made an announcement. He thinks, well, now it's time we're going to start becoming dovish. We're not going to be raising rates as aggressively. We're going to cut back from 75 to maybe 50 basis points, maybe 25. We may even stop. He's a fool, because inflation, okay, is not 8%. Inflation is 16%, okay? We're not done, not nearly done, okay? We got to keep fighting inflation. So he stops in the middle of all this. So yesterday, they come out with the manufacturing number, ISM number, and that tells you the strength of new orders for factories, manufacturers. Horrible. It's been horrible anyways. For 5 straight months, manufacturing has dropped off every month. In fact, if you follow that number, that you'll see it drop below 50%. That is the real danger zone. That is really dangerous. That means that orders are tumbling. So, because he decided the other day that we would become dovish instead of hawkish, start cutting back on our rates, the market dropped 500 points yesterday. Because, see, Mr. Market knows what's best for the market. Matter of fact, if you got rid of the Federal Reserve altogether, the market would do a lot better. Why have them intervene? Because they're stupid people, first of all. Why do you have stupid people intervening? Just let the market set the rate. We'd be much better off. So today we'll see what happens in the market today. they're going to try to push the market back up. That's what they do every time. They're going to use the plunger team to come in and buy treasuries and all the different tricks they use because they've got to get to that they got to get that rally done. But overall, the market right now is in deep trouble. Inflation's not over with. We got more inflation to go through. So I would say that the banks are in real trouble. I've told you that for months and months and months. And look how the banks collapsed. Start out with the regional banks. Now the big banks are collapsing. I told you that was going to happen because they don't have enough money. All their money is set aside for bad debts. And at night, when they go to borrow money from each other, remember there's 4 big banks, big investment banks that provide money at night. And they trust each other. And as long as they have a lot of treasuries on the balance sheets of each one of these banks, that's good credit. But when they don't have enough money to buy more treasuries to put on their balance sheet, one bank doesn't want to loan to another. And that's what's starting to happen again. Remember, in 2008, that caused a crash to occur. Okay? You heard the term credit froze up. Well, that means when the 4 biggest banks don't want to loan to each other anymore, it's over. That happened in 2019 again. We had to come in with the Fed had to print $750 billion as an emergency, come back in, give it to the banks. Because so the banks keep operating. The banks are in such deep trouble, even though we've been doing terrific with our bank stocks. But I've been warning my members all along as we've been going up. We're up about 15, 20%. I keep telling them, take profits, put your stops in, because these banks are going to tank at some point, and they're just starting to tank. So if you can't get the rally going with tech stocks, okay, which they can't because there's no QE, and the banks are tanking, and now all of a sudden he's laying off of fighting inflation, look out below. I think after January, especially about February, I think you're going to see this market go right back to the October lows. But as I always say, when the market opens, we lose our opinion so we don't lose our money, and that's why we trust our charts. Join my gang, philsgang.com, 10 days free, and check out the Pro 2 color-coded chart. It's never wrong. It tells you when to buy, when to sell, and when to run like hell. See you on the charts.